A lot of people think their taxes are due April 15th, but that is one of the biggest myths around taxes. So let's talk. Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal, hosted by Anastasia, Maisha, and Danielle.
Part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy, we decode everything it takes to run a thriving creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
Hi, welcome back. So why do we think that it's all due April 15th and what should we be doing?
Because it gets a little bit confusing.
Okay.
Because the piece of paper is due April 15th.
Okay.
So your tax return is due then, but your tax payment is due much earlier.
Okay.
So you have to remember all of the states, the federal government, they would like their money.
Yes.
If they don't have to wait, they don't want to. So when you have a W-2 job, you're not really thinking about it because they're taking the taxes out as you're working.
Yeah.
So that's in line with the federal pay-as-you-go system.
Gotcha.
So that's how they describe our tax system, pay-as-you-go. So as you earn money, you should be paying the income tax towards it. So when you're a W-2, that's withheld every single time you get a paycheck. When you are freelance, 1099, or you have your own business, those are going to be paid through quarterly estimated payments.
Oh, okay.
So those are due April 15th, June 15th, September 15th. And then for the federal government, it's January 15th. But for a lot of the states, so California is a great example because they skip the September payment.
Okay.
And then they do December 15th.
Okay.
So,
like to get tricky with it. Okay. Okay.
So, and that's a lot of it. So you're filing the piece of paper for last year on April 15th, and then you're making the balance, remainder payment, but then you also have to make your first payment towards the current year. On that day.
Okay. Okay.
So it gets a little bit tricky.
Okay.
And then, how much am I supposed to pay?
Yeah. How do you calculate it? Yeah.
Because the year hasn't even happened. So
yeah.
And the thing with the quarterly estimated payments is if you miscalculate, they will go backwards and they'll give you a penalty for under withholding, and then they'll start charging you interest. And right now, the interest rate is like 11%.
Oh.
An annual 11%. So it's
incredibly sweet of them.
Not,
okay. Yeah.
So if you underpay that first payment, but then you catch it up the second time, you still will have interest between April and June because that payment should have been made in April. So that is a lot of fun.
Yeah.
And so with the pay-as-you-go system, because calculating what you need to pay can be a little bit tough.
Yeah.
What the rules are is if you make under $150,000, you pay whatever you paid last year.
Okay.
Or 90% of what you think you'll owe.
Okay.
Whichever is the lower number.
Oh,
so
okay. It's a little bit not the higher.
Yeah.
Okay. Okay.
So that really takes into account, let's say in one year you make a decent amount of money, but the next year you're not working at all. As long as you pay that 90% of what you think you're going to owe, then you're good. And a lot of times this comes into play when I'm converting a business from a single member LLC over to the S corporation in that first year.
Yeah.
Because the prior year has a really high tax balance.
Yeah.
But because we're doing the conversion over to the S corporation, they're going to be saving $20,000, $30,000. So I need to make sure that I'm pinpointing what is the 90% of what I think they're going to actually owe.
Yeah.
Because if we come in too low, then they're going to have
the penalties and fees and stuff.
Yeah. And it might be just a little bit. I mean, normally it's still going to be less than if they didn't do the S corporation, conversion.
But still, I don't want to give any more money than
it's
if
always
I don't have to.
so annoying to get a letter from the IRS. It's like, hey, can I have $23, please? And something silly. And there's not always. There's first-time penalty abatement if it's significant, but A lot of times it's going to be a little
Honestly, it's just not fun to get those letters in general. Like they're always a little scary. So yeah, we can just avoid it. I think that'll be great.
Right,
Yeah.
right. So you have to remember April 15th, so let's say you paid 100% of what you paid last year, but your income taxes are actually a little bit higher than the 100% of last year because the business did really, really well. On April 15th, that's where you're supposed to pay that remaining balance.
Okay.
And then I got a lot of people asking, if you ask for an exemption, again, that's only for the piece of paper.
Okay.
When you file your exemption, you need to pay the full amount of tax that you owe.
You mean extension?
Yeah.
Oh, okay. Okay. I heard exemption.
Oh,
so that's I was like,
yeah.
No, I'm confused. What exemption do they have from taxes? Okay.
When they file for an extension.
Extension. Gotcha.
So
yes. We're on the same page.
They can file their return in October instead of April because you need a little bit.
I got you. Okay, to push it back, but you still have to pay your taxes due.
Yes.
Okay.
By April 15th, you have to pay 100% of the tax that you owe.
And the only way they would do that, either do it then or they had done it all throughout the year prior, right? Okay.
Through the quarterly estimates. But in that example where they earned more money, so they made all of their quarterly estimated payments, but they earned more money than they did the prior year.
That balance is
is owed on April 15th.
Interesting.
And so when you file your extension, there is the opportunity to send in that payment. So a lot of people say, but I filed for an extension, but that
doesn't get it
only the piece of paper. The IRS and the states, they want their money exactly on those dates. So you'll still have some late fees. And I know in the last few years, a lot of those have been pushed off. So we had COVID, then there was flooding in California. Now we have the fires. So a lot of those deadlines have been pushed back so far that it's really easy to not pay attention to it. Because this year in Los Angeles, because of the fires, you can wait to pay that balance due until that automatic extension it has expired. So you have until October. So some people will say, I paid it in June last year and I didn't have any problems. Why do I have to pay it in April? Or, I've done the same thing that I've done every single year for the last 5 years. Why am I suddenly getting a letter now? And it's because there's no longer an extension that applies to the payment.
Gotcha.
So, yeah.
Interesting.
So when you file that request for extension, it's only for the piece of paper, which is silly because you're filing the piece of paper because you don't have all the documents available to be able to file your tax return, which would tell you how much you owe. But somehow
you still have to pay how much you owe. Yeah, no, it's fine. They really just want you to file and pay on the 15th. Yeah. Okay.
So, and especially in some of the years, the interest was 2 to 3%. So if you were able to find a high yield savings account, putting the money in the high yield savings account until you were ready to actually file, you would get more in interest than you would if you had just given that money to the IRS. So you would still have that little bit of penalty, but it would be smaller than what you could earn if you could keep it. But with interest rates being 7%, it's going to outperform a simple high yield savings account these days. So it makes more sense in these cases to overpay by a little bit just to make sure that you're not going to be subject to any of those interest and penalties and things like that.
Yeah. Gosh, it is so tricky.
I mean, yeah. It gets a little bit.
It makes sense. That's why we have professionals like you who do these things. But it's just so crazy, all the intricacies of it all.
Right. Yeah. Right. And sometimes, I even say if you have to, making sure that you have all of your documents available, that you have everything that you need, it might save you more money to wait to file because once you have all of the information and the tax preparer is able to go through it, they could save you more money than if you rush to go online and file it yourself and just to pay it and get it over with.
Yeah.
So, because I've had some people that would do that. They just go into, one of the big box tax preparer places, and they pay the $800 or something just so that it's filed on time. And then they give it over to me and say, I know, like, they messed up pretty significantly here.
Yeah.
You know?
Yeah.
It's like a installment sale. That's really kind of outside of the purview of
Yeah.
you know? And so he was like, I know they did it wrong, but I just wanted to file my taxes on time. And I'm like, I mean, but you just paid $800, which is more than what the penalty would have been.
Yeah.
And doing it twice, all of that fun stuff.
Yeah.
So there's different considerations that kind of come into play.
That makes sense.
The key idea is making sure that you are paying taxes on a quarterly basis. Now, the only tricky thing with S corporations.
The only tricky thing, but okay. Yeah.
Well,
go ahead.
So anything paid through withholding is treated as evenly paid throughout the year.
Oh, okay. Okay.
So that way it kind of takes a lot of the pressure off of W-2 employees. But there's different ways that you can use that to your advantage.
Oh, tricky in a good way.
Yeah,
oh,
tricky
okay.
in a good way.
Okay.
So that's why you'll see sometimes, I call it a super payroll, where an S corporation owner will run their payroll only at the end of the year. They'll do their reasonable compensation. And then when they process that payroll, it's also the end of the year. They have a fairly decent idea of what their taxes should be, comparing it to what they paid last year. And they can make their income tax payment in bulk. So then again, they didn't pay the April, the June, or the September. So they were able to keep that money and make the money work for them in other ways, like a high yield savings account, things like that. And then they're sending it off to the IRS at the end of the year. And it's a little bit easier when they know exactly how much. And that's what I love, especially for S corporation owners, where you don't really know what's going to happen.
Yeah. Until the year's done.
We're able to calculate. We know what your reasonable compensation is going to be at the beginning of the year. We can base that off of how much you've taken out of the company, which is another fun calculation. But we're also adjusting every quarter and saying, okay, here's what's happened. We're still thinking that you're going to need to owe this amount of money in taxes. And we can adjust it throughout the year so that when we run that super payroll in December, you have a pretty decent idea of what you should have in your bank account to be able to do that. You can also do that with your IRA.
Oh, yeah? Okay.
Because when you withdraw money from your IRA, it'll ask you how much you want to withhold. So you make a withdrawal from the IRA, ask them to withhold the funds. But if you replace the funds within 60 days, it doesn't count as a distribution.
Really? Oh, wow.
So that's where it gets weird. Because if you owe $10,000 in taxes and you just write the IRS a $10,000 check in December, they're going to charge you because you didn't pay that $10,000 over April, June, September. But if you pull the $10,000 out of your IRA, ask for it to all be withheld and sent to the IRS, and then you take the $10,000 in cash that you had to write, and you instead write the check to your IRA, then you don't have any late fees.
That is awesome. That is crazy. It's like how much fine print did you have to read to then be like, oh, that's, that's crazy. That's cool.
So even though you have those, they call it like the safe harbor, that minimum payment that you have to pay to the IRS. There are ways to be able to still hold on to the funds so that you're able to use it for longer.
Okay.
And then you're earning money off of it, because that's all that the IRS is going to do. You know, they'll probably sell it in bonds and, all of that kind of fun stuff and start earning money off of it. So why not you?
Yeah.
But those are some of the strategies that a good tax strategist will identify for you, notify you of when you need to be doing this, and then also help you walk through the steps.
Yeah.
Yeah.
No, I mean, it makes sense. I think knowing all year long, like kind of like, okay, this is it. So I always have that in mind, or I can put that away somewhere. So like that money's not my money, and just knowing it and not having like surprise April 15th kind of thing. I think that's
because if you have that same $10,000, but you kept it in a high yield savings account for the whole year, then you just got $500 free.
Yeah.
So
fantastic.
Still taxable, blah, 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 blah. But I mean, it's $500 that you wouldn't have gotten if you had made your quarterly estimated payments like you're required to do.
Yeah.
But you're still required to pay that minimum tax. But if you do it in these,
fun, creative ways. Yeah. Yeah. Yeah.
I mean, I don't know if they're creative, if everybody is doing it, but
I guess creative to me because I didn't know everybody was doing it. So these are like fun new things that I didn't know
well,
about.
and these are some of the things where people say like, oh, the 1% isn't paying any taxes. And it's because they're utilizing all of the tools that are available to you so that you can make sure that the money is working for you for as long as possible before you hand it off. Versus if you're not paying for a tax strategist, you may just give it to the IRS and not even think twice about it.
Yeah.
About other uses that you could have for this money and, different ways to manage it. But the key here is you need to pay your tax before April 15th.
Yes.
It is not due when you file your return. It is due evenly throughout the year. Any balance, extensions are only for the piece of paper. So the balance still has to be paid even if you ask for an extension. So a lot of it, especially right now with the high interest rates, it's just in your best interest to
go ahead and pay. Yeah.
Unless you can do some of these,
like
with
fun tax strategies. Yeah. No, that makes sense. It's very cool.
Love it.
Always learning something new.
So that is a little bit more about your estimated payment requirements and some tips on how to make sure that you are fulfilling your safe harbor requirements, but also making sure that you have cash available for your business. So if you have any questions, feel free to put a comment below or send us an email and let's talk.
Bye.
That's a wrap on Let's Get Fiscal. Ready to stop guessing and start saving? Click the link in the show notes, grab your consult, and let's make your business work for you, not the other way around. You've got this.